Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus. Apologies for that. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market events that are currently impacting various asset classes, with a key highlight of the proposed tariffs by the current president-elect Donald Trump in the US, as well as the FOMC meeting minutes that will be released later in the evening. So, as usual, before we begin the session, I would like to issue a disclaimer that this session does not represent investment advice. It's not a recommendation to trade. So you should always do your own due diligence and practice proper risk management. So I can see some guys have already joined and good comments on the comment section. So hello, Kevin Kiplimo. Thank you for joining. You can see Jason Otuori Samuel in the house. Ken Mwaneki, thank you for joining. Paul Kerry, Wangari Patrick, David Giduka, as well as Mimi. So let's get things started. So we'll be jumping right straight onto the economic calendar and try to understand the top market events today. So as you can see from the economic calendar, the week begins getting busy after the quiet Monday. So first things first, we had the Bank of Japan core CPI year over year, where inflation dropped from 1.7% in the previous month down to 1.5%. And this is not within the targets of the Bank of Japan. So Bank of Japan has been looking to get increased inflation, which would force wages to increase. Now the current drop from 3.4% all the way down to 1.5% is not looking really good. So when CPI is dropping in Japan, it becomes a core problem because the long-term goal for the Bank of Japan has been to increase wages, which have remained stagnant for a while. So we'll be looking at the market reaction to that later in the presentation. Then later on for the day, there will be a key focus on the US housing market, with three major reports coming up, one of them being the Case-Shiller Composite 20 Housing Price Index. This is the year-over-year measure of the changes in housing prices. Of course, we expect a slowdown from 5.2% down to 4.7%. So as for the monthly increase for the housing price index, we expect a 0.3% increase compared to the same increase last month. Then we also be looking at the new home sales, where there is an expected slowdown from 738K down to 725K. So at the same time, we'll be getting the Conference Board Consumer Confidence Survey, where we're expecting an increase from 108.7 to 111.8. And of course, we know about the Trump bet. So Americans are heavily positive on the performance of the US economy, especially after Trump won the election and basically won the control of both houses, that is the Senate and the House of Representatives. So there will also be the Richmond Manufacturing Index, which is expected to slightly improve from -14 to -10, with the main event of the day being the FOMC meeting minutes. So this is a detailed report of what happened in the last meeting that ended on the 6th of November, on the 7th of November. So we'll be looking into finer details of what was discussed, the Fed's dot plot, and the expectations for interest rates, especially in the December meeting. So this will be a key report impacting the performance of the dollar. So if the FOMC members are more in favor of faster rate cuts, then in that case, we should be seeing a much weaker dollar. But then on the other hand, if they are more reserved on whether to cut rates in December or not, then that should be strengthening for the US dollar. So outside of the economic calendar, we have quite a number of things that have happened. So one, on the cryptocurrencies market, we have seen Bitcoin making a big drop in the last 24 hours. It's down 5%. So after getting very close to $100,000, which was $99,000, it has dropped all the way down to 93,340. And on the same period, we have seen also other cryptocurrencies being largely on the negative over the past 24 hours. So you can notice it's a sea of red for cryptocurrencies. So outside of that, there's the main event for the day. So yesterday in the afternoon, Trump promised to enforce the campaign promises where he talked about new tariffs for Canada, Mexico, and China. So among the key highlights, President-elect Donald Trump on Monday pledged big tariffs on the United States' three largest trading partners, Canada, Mexico, and China, detailing how he will implement campaign promises that could trigger trade wars. So Trump, who takes office on the 20th of January next year, said he would impose a 25% tariff on imports from Canada as well as Mexico until they clamped down on drugs, particularly fentanyl, and migrants crossing the border in a move that would appear to violate a free trade deal. So Trump also outlined an additional 10% tariff above any additional tariffs on imports from China in some of his most specific comments on how he will implement his economic agenda since winning the November 5 election on promises to put America first. So on January 20th, as one of the many executive orders, I will sign all necessary documents to charge Mexico and Canada 25% tariff on all products coming into the United States and its ridiculous open borders, he said in a post on Truth Social. So just to put this in perspective, 83% of exports from Mexico ended up in the US in 2023, and for Canada, 75% of their exports ended up in the US. So facing such large tariffs from the Trump administration would be such a big hit on both the economies as well as their currencies. So we already saw the market reacting to that yesterday. So that will be a key theme in the markets today. And of course, the potential for US-China trade war is also causing volatility and a weakening of the Chinese yuan against the dollar. So among the major movers of the day is Supermicro, which is up 15.87% before the market opens. Mara Holdings is up 1.5%, Plug Power up 14%, and New Holdings up 2.3%. So there's also other trending trending tickers. We have Rivian Automotive is expected to be up 13.28%. HIMS and HAS up 23%, as well as Zoom Video Telecommunications up 3.67% after they reported better than expected earnings yesterday. So also one big company that took a big hit yesterday was Cassava Sciences, which dropped by 83.78%. So those are the key highlights for the day. And the last one is on gold. So gold plunges 3% as Trump Treasury peak and potential. Israel Hezbollah truce fuel risk on mood. So gold prices lost about 3% following the President-elect Donald Trump's pick for Scott Bessent, who will be the new U.S. Treasury Secretary, as well as on emerging reports of a potential ceasefire agreement between Israel and Hezbollah. So the $100 wipeout in gold today, this was yesterday, is as severe in size as pace as the post-US election sell-off on November 6th. So gold prices lost 3% after Trump picked Scott Bessent as his Treasury Secretary, with, of course, the ceasefire being expected. So spot prices of the euro metal dropped 3.44%. As we have checked, it's almost down 5% per ounce. And we expect this kind of sell-off to continue. So normally, whenever there is geopolitical tension, like what we have seen as the escalation between Russia and Ukraine, Israel and the neighboring countries, these usually puts a premium on the price of gold. So as investors play safe, they take some exposure with gold as a safe haven asset. But then when these geopolitical tensions are quelled and we start seeing normalcy and peace being restored, then that premium is often raised. So the premise of Trump potentially negotiating peace between Russia and Ukraine, Israel, Hezbollah, is basically leading to investors removing that premium, leading to a basic sell-off in the gold prices. However, the long-term performance of gold is still bullish, but for now we are seeing this temporary pullback playing out. So we should be expecting to see some further downside momentum. So outside of that, I don't see any other major news for the day. So I believe we can jump straight and now try to understand the current market structure, try to understand what we should be expecting going forward. So let's get into some technical analysis and try to understand what are the primary market patterns. So of course, the chart right ahead of us is the chart of gold trading against the euro. So after the strong momentum here, you'd notice that gold had made this strong rally, about 8.1%. Now it's erasing all those gains with a big sell-off happening yesterday. And of course, this morning we have seen an extension of the same as the market extends the bearish momentum. So clearly, as the market continues erasing this premium that it had, then there is that likelihood that we could be seeing some further downside momentum in what looks like a major swing in the price of gold, with the next potential target being around 24.68 euros per ounce of gold. So we could be seeing an extension of this bearish momentum. So from the 15 minutes chart, this is how it looks like. So clearly, after attempting to make a recovery in early morning trading, we have seen more pressure leading to further downside momentum. So as for gold trading against the dollar, we had a projection. I remember doing this yesterday and mentioning that if we break this particular resistance, then the overall expectation was that the market continues higher and heads to 27.89. Of course, this was wrong. And as I mentioned at the beginning of the session, it's not every time that I will be right in my projections in the market. So what we saw was the market attempting to break and eventually rejecting. So from the forward chart, this is how it looked like. So on the following candlestick, there was an immediate pressure to sell gold. So it kept going down, and now we have already erased like half of what we had gained last week. So from the 1 hour chart, this is how it looks like. And an attempt to make a recovery early in the morning was faced with more selling pressure. And now it's more likely that gold may extend the downwards momentum for the day. So potentially we could be seeing some further bearish momentum, potentially to around 25.91. So this is a likely potential outcome with a key observation. If you are shorting gold, you should be very careful, because it could potentially make a recovery similar to what it did after the big sell-off in the last 3 weeks. So we had a 3-week sell-off, and then last week gold prices recovered. This week we are seeing more of a bearish momentum, meaning that right now what we are looking at, as for now on the weekly chart, this is the market that is forming lower highs. And if you look at the lows, they're also getting lower. So overall, the expectation for this period is that gold is following this particular path. So for now, it makes more sense to be targeting much lower prices, but the market seems to be struggling with this particular bottom here. So of course, we are looking at a potential retest and gold pushing down to 26.02 with a potential extension to 25.91. However, you should be careful. Don't be overly aggressive on the short selling side, because we could be seeing buyers coming back. But for now, it seems more likely that prices are headed much lower. So a chart that is quite interesting for the day is the chart of Brent oil. So after maintaining this channel for a while, of course, we had the projection the market would move from this side of the trend line down to this area here. Of course, the sell-off was much bigger than expected, and after breaking, we saw the market going all the way, and this seemed like the potential bottom. So notice how the market opened with a gap this morning and immediately started reversing the drops, and now we are seeing a potential for making a strong rally that could be headed for $73.194 per barrel. So on the US equity side, Of course, we had this expectation yesterday that the bullish momentum will continue. So it's still on course. So for the Nasdaq 100 index, if you go to a smaller time frame, the 15 minutes chart in this case, then you notice the likely theme that the market is following this particular channel. And with this in mind, then the areas on the lower trend line seems to be the value areas. So anytime you see the market pulling back downwards and getting closer to the lower trend line, that's where we should be looking for potential buying opportunities. So if we happen to see another one here, then that would be really nice for a bullish momentum trade. So potential for this one playing out could be nice. Remember, this was a new high for the last couple of weeks, and the all-time high is not very far off. It's 21,241. So we already bounced at around midnight from the lower side. So the market doesn't have to make this pullback to continue. We could be seeing an outright push towards the upper side. But for now, this seems like a likely idea, especially in the New York session, with a target being the high that we saw yesterday. So for the US30 or the Dow Jones, we formed a new all-time high yesterday. So I remember we mentioned about this, monitoring this area, looking for a break. Break happens towards the upper side, and the market kept going up. So today we had a pullback and recovery. And from what we can gather from this chart, it seems more likely that the market is slowing down. So now we are looking at this as a potential range. And if it happens to become a range, then we trade the breakout. So potentially the market will not stay within this range for forever. At some point, we will be seeing a break. So we observe whether the market breaks towards the upper side or towards the lower side. So the Russell 2000 managed to bring out a new high yesterday. So from the forward chart, you can see that we hit a new all-time high. So from the day time frame, today, it seems like the market is pulling back downwards. But then there's also that likelihood that the market will eventually bounce back upwards. So new all-time high yesterday, market pulled back. Today at market open, there was a sharp drop. And if you look closely, you'd notice that we had a gap on Monday. So the market literally just dropped instantly, closed the gap. And now we are seeing the market rebounding from that, which means that we are more likely to see the market going for another all-time high with targets around yesterday's high. So I think it's time we remove this line and focus on yesterday's high. So for the SP500, we were very close to getting to a new all-time high, but the market pulled back. So yesterday on the analysis, we talked about this area here with a potential break. So the break happened towards the upper side, but in later trading hours, the market pulled back downwards. So from the 1 hour chart, this is how it looks like, and we are still having that potential that the market might be headed higher. So in this case, if we remove the prior analysis and go to the 15 minutes chart, then we'll notice that the current market formation is following a path that looks like a channel. In this case, that being the lower trend line. And of course, for the upper trend line, we are following this path. Of course, we know that the value areas will more likely be on the lower trend line. So the idea is if this plays out, then we potentially look for a bullish momentum trade along the trend line. So of course, you don't take these as low. Of course, the market may always break the trend line. If it breaks the trend line, then that changes the narrative. We start looking for short selling trades. But the idea is that if the market bounces from here, then you could squeeze in a nice bullish trade towards the upper side. So for BTC, we are seeing this big sell-off from $99,600. Now we are at $92,800, and with more bearish momentum being seen in the charts. Of course, for Bitcoin, bullish positions have been more profitable than bearish positions. So anytime we have these kinds of pullbacks, the idea is to wait and look for evidence of buyers coming in. Then that might make more sense to be looking for a trade that way. So for now, what we are seeing here is a breakout retest continuation. Of course, we should be expecting some further downside, perhaps even seeing 89,928, with the idea that if the market keeps going down and you see evidence of buyers coming in, then you look for a bullish position if you didn't already short at the top. So on the currency side, we have Euro USD attempting to make a recovery after closing the gap this morning. So we expected the market to close the gap yesterday. It really struggled, but eventually it did. And now, after closing the gap, we are seeing the euro regaining some ground against the dollar. So the pound also managed to close the gap right after midnight. And after closing the gap, we are seeing the bounce happening. In that the market is now attempting to make a recovery after closing that weekend gap. So we could be seeing that as a key theme for the day, that once these gaps are closed, this was the difference between the closing price and opening price on Monday. Then now, after closing this gap successfully, we expect the market to be now moving in the opposite direction. So what is emerging here in this chart is that the market is now creating a formation for the week, and the formation for the week seems to be following this path. And on the upper side, it seems more likely that the market is following this path here. And the overall direction for the week so far, it seems like the pound is following this particular direction. So while we are making some form of recovery, this will be a key level to watch to see if the market rejects this area and goes back down to our lower trend line. But then the idea would be, if the market happens to break this area, then we move higher with a focus on the highest price that we saw yesterday. So as for pound yen, we are basically bouncing on the lower trend line. So yesterday we expected the market to be bouncing strongly, though now we had a pullback here. And seeing the inflation data from Japan this morning, notice how that the pound had already lost to the yen, but now it's looking to mount a comeback. So even without those aggressive targets, then yesterday's high might be an idea for today, with the market bouncing from the lower trend line and potentially getting back to 194.6. So for USDN, it's a similar thing. So what we are seeing here is a market that is really struggling to break, but then eventually you'll see that long-awaited break. So here is the current market setup. So with this in mind, the market is trading in a triangle, then eventually we'll have that long-awaited breakout. So from the 15 minutes chart, this is how it looks like. So it's a much more volatile market with the range getting smaller and smaller. Eventually, we'll be waiting to see if there's a break. So the break could be on the upper side or the lower side. So we remain patient. So remember, in such a triangle, the more we approach the apex here, or the meeting point between the two trend lines, the higher the likelihood of a breakout. And a breakout towards the upper side would be really nice, because we target all the way up to the top of the pattern. But a breakout towards the lower side wouldn't be that much impactful, because the targets would be much closer. So for AUDUSD, we saw this big sell-off happening in the morning, and then the market made an instant recovery. So here we are looking at a market that basically or literally grabbed liquidity from the previous support area here. So anyone who had a stop loss around this area, they were wiped out clean, and the market bounced immediately, which means that there's now more likelihood of the market moving higher, having grabbed some liquidity here, with the potential of yesterday's high being retested. Of course, yesterday on the gap, it was already closed, so clearly the extension is more exhaustive. So dollar trading against the Swiss franc, this is the one and only chart that refused to close the gap. So all we have been seeing is the dollar weakening further against the Swiss franc. So from the forward chart, this is how it looks like, and from the daily time frame, this is how it looks like. So clearly there was a big gap downwards, and the market seems to be reversing from this particular area after the strong rally that came after the September sideways momentum. So September market is moving sideways, October higher, and now November even moving higher. But then upon reaching these highs, we are seeing the market now changing direction. So it seems like the market is really struggling to continue with the bullish momentum, and we might have had a top already, and the market could be now facing some further downwards momentum. So from the 1 hour chart, this is how it looks like. So we are basically looking at a market that has been following this area as a key level support and is potentially looking to make a breakout. So looking at the previous highs, if this has been the overall formation, then the potential for a breakout here could initiate a short selling position once the breakout plays out. So the dollar index is really struggling after the big sell-off at market open. Today, this morning, it managed to complete the retest and closing of the small gap here. And now we are seeing the dollar being overall weak after the big momentum upwards. So all these gains that were made in the first hour of trading, the market is already erasing them. And we could be seeing some further downside momentum playing out in the dollar index. So as we had projected yesterday that the dollar will eventually recover to this area, it played out at midnight, and now we are seeing some further downside momentum. So from the 1 hour chart, we could be seeing an extension of the bearish momentum, potentially retesting this trend line here. So this could be an idea going forward for the day. So remember, when more tariffs are implemented by Trump, this is expected to be weakening to the currencies that are facing these tariffs. So among the currencies that might be facing this is USDCAD, and there is USD MXN for Mexico, and USDCNY for China. So just to give you a brief highlight for the Chinese currency, whenever we talk about the Chinese renminbi, which is the name of their currency, if you see CNH, it means the offshore yuan, and if it's a yuan from China, we call it CNY. So that's the key difference between CNH and CNY. So after the comments yesterday, notice how the dollar gained against the Chinese yuan, hitting a new high. And this is a high that we haven't seen in a while. So the last time the market was trading here was in July 30th. So after breaking this key level resistance that has been holding for weeks, then there's a good likelihood that we should be seeing some further upside momentum playing out on USDCHF. So this might be a likely trade for the day. For anyone who has been following this range, you know that once you get this breakout in, then we should be getting some good momentum upwards. So this is a key asset to be watching for the day. So also for the Mexican peso, we are also seeing some similar momentum. So after the announcement by Trump yesterday, notice how the dollar gained against the Mexican currency, and now there's some form of pullback, but we could be seeing some continuation later in the day. So for now, it's more of a bullish momentum, and given how tough the sanctions might be for Mexico, we expect to see some further upside momentum. So we continue monitoring this momentum here. So of course, the momentum already happened, so we are technically entering into some form of consolidation. And if you go to an even smaller time frame, then you should start monitoring these highs and maybe the next set of lows before the market eventually makes a break. So for now, it seems more of consolidating after the big move, so not likely an immediate opportunity. So I don't know if I covered USDCAD. I'm looking for the pair. Dollar trading against the Canadian dollar. Just give me a second. Okay, I can load the chart directly. So this is what we are seeing or witnessing with USDCAD. So from the daily time frame, it's a pretty big move here. So we managed to break a previous high, and now if you zoom out the chart, you'll notice that the last time this was trading here was all the way back in 2020 on the 30th of April. So it's a new multi-year high. Of course, from the 1 hour chart, you can see the overall market reaction. So after the pullback later in the Asian session, we are seeing the market continuing. So of course, we expect the market to at least retest the session's high. So I expect to see a continuation of this and perhaps extending above the Asian session's high. So that's it for the day. Let me check if there's any questions as we approach the end of the presentation. Hello, Davis Ngige. Thank you for joining the session. So it seems like the yen pairs are changing direction now. There's this question here. What makes gold drop almost 1,000 pips? I think I already explained that. And I don't think it's 1,000 pips. It's just 1,000 points. 1,000 pips is quite a large number. So this is the drop here from this area down to this area here. Yeah, sorry, this is true. This is 1,000 pips. So we are seeing the potential of Trump negotiating a peace agreement between Russia and Ukraine, Israel, and its neighboring countries. And when peace is restored, then there's no longer a need to hedge on gold, and that basically erases the premium on gold. So that may explain why we had such a huge drop, but the long-term trend is still bullish as the BRICS countries continue buying even more. So as we approach the end, I would like to invite everyone to a session that we will be having in Mombasa on Friday, the 6th of December at the Hotel Sapphire from 2 p.m. So if you're listening to this from Mombasa, make sure to prepare for that event, and you can register using the links available on our social media channels, and then your seat will be reserved. So come prepared for one serious analysis session as we look to interact with you guys and try to understand how best we can help. So a new episode of the Bullish Banter will be premiering at 2 p.m. today. So make sure to check it out on all platforms, including FXPesa YouTube, and be prepared for a new Swahili edition. So this will be one new episode that covers a different angle and approach to trading. So make sure to check it out on all podcast platforms. So that's it for the day. Thank you very much, guys. So there's just one last question on USD trading against the Swiss franc. So as I mentioned, for this particular chart, just watch out the interaction of price with this lower trend line, where if there's a break, then we should be looking for a potential short selling opportunity. But if the market fails to break and bounces, and you see evidence of buyers coming in, then potentially look for bullish positions. So that's it for the day. Thank you very much, guys, and I hope to see you on the next session. So remember, the market snapshot runs every day, Monday to Friday from exactly 11 a.m. So make sure to set a reminder. If you're watching this on X, like and share the video, and of course, expect more videos going forward. Thank you very much, guys. See you then.